Welcome to Uncovering Trusts, a podcast by the Edison Group, a content led IR business integrating analyst content, digital targeting, and investor engagement. Each episode will uncover the distinct features and latest developments of a selected listed investment company. So tune in to find interesting investment ideas and stay on top of what is happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Milos Pabst, Director of Investment Company Content at the Edison Group. We'll talk about Martin Currie Global Portfolio Trust, whose ticker is MNP. Milos, thanks for joining us today.
Hi, Will. Thanks. Good to be here.
Great. So, shall we begin by focusing on a high level look at MNP?
Yeah, sure. Good idea. Just to provide some background, since July 2020, Martin Currie has been at a division of Franklin Templeton Investments, which is a major US company with more than $1.5 trillion of assets under management, following the acquisition of its former parent, Legg Mason. However, it is important to understand that Martin Currie has maintained its autonomy and its investment philosophy and processes remain unchanged. The trust was launched in March 1999 and since October 2018 has been managed by Zegrit Osmani, who is head of Martin Currie's global long-term unconstrained investment team. He aims to generate a total return in excess of the total return of the MSCI AC World Index. He runs a high conviction portfolio of 25 to 40 high quality global growth companies with superior share price appreciation potential based on projected return on invested capital, balance sheet strength, and sustainable business models. I would also note that the trust has been awarded the highest available 5 globes for its Morningstar sustainability rating, which evaluates the trust's portfolio environmental, social, and governance risks versus those of its peers.
Okay, so now would be a good time to focus on the investment process, which I understand is a big part of the MNP story.
Yeah, so Osmani has an unconstrained approach and invests with a long-term 5 to 10-year horizon. He employs a systematic bottom-up 3-step investment process. Stage 1 is idea generation, where the universe of around 2,800 listed global stocks is screened down to a research pipeline of around 90 names, aiming to identify companies with a combination of quality, sustainable growth, and an attractive valuation. The manager believes that companies that can generate a high and sustainable return on invested capital above their weighted average cost of capital can generate above average long-term total returns. Stage 2 is fundamental analysis, which is based on 8 key criteria: industry analysis, a company's growth drivers, returns, financial strength, accounting, corporate ethos, ESG profile, and valuation. Businesses are assessed on a scale of 1, lowest risk, to 5, highest risk, across a wide range of measures. As part of the process, there is an in-depth systematic risk assessment focusing on industry risks, company risks, governance and sustainability, and portfolio risks. Firms considered for inclusion in the portfolio are likely to have a dominant position and pricing power in a market with high barriers to entry. To assure a consistent approach, a proprietary research template is compiled for companies reviewed, and each is given a conviction rating between 1, strong buy, and 5, sell. Stage 3 is portfolio construction. Each position is weighted appropriately, aiming to ensure meaningful contribution to the fund's returns. The portfolio is broken down by geographic revenue and profits rather than where a company is listed to understand the fund's exposure by economic value. The portfolio is also assessed in terms of end user exposure at the tier 1 level, the consumer, business, and government, and then at a more detailed tier 2 level, focusing on individual sectors and industries. Stocks may be sold when they have reached or are nearing their price target, if there are better risk-reward opportunities elsewhere, or if the high conviction investment case no longer holds true.
Okay, so now we understand the process. How does the resulting portfolio compare with the benchmark?
Versus the MSCI AC World Index in aggregate, the trust's holdings have higher forecast revenue, earnings, free cash flow, and dividend growth, higher valuations in terms of forward PE and EV/EBITDA multiples, a higher return on invested capital, and less leverage based on net debt to EBITDA. These relative metrics reflect the trust's biases towards growth and high-quality companies with pricing power.
Okay, understood. So, shall we move on to talk about the structure of the portfolio?
Osmani and his team have identified three important growth trends that they believe will be in place for many years to come. These are the future of technology, resource scarcity, and demographic changes. Within these broad trends, important themes represented in the fund are the growth in AI, the energy transition, and an aging global population. Focusing on the first theme, NVIDIA is widely considered to be a major AI beneficiary. It is the trust's largest holding, but is not a new position as it has been in the portfolio since 2021. Other holdings that play into the AI theme include ASML Holdings and B Semiconductor Industries. The manager's unconstrained approach is illustrated by MNP's geographic and sector weightings. There is a notable underweight US exposure despite this country's dominance in global indices. The largest sector overweight by a wide margin is healthcare, and there is also a meaningful underweight exposure to financial stocks. 4 of the 11 market sectors are not represented in the portfolio as these stocks do not have the quality growth attributes that the manager seeks. These sectors include communication services, energy, real estate, and utilities.
Thank you. So, could you provide some color on the trust's performance track record?
Sure. Prior to Osmani becoming the trust's lead manager in 2018, the trust's performance was somewhat lackluster. The adoption of a more disciplined investment approach made a real positive difference to MNP's relative performance. However, in 2022, growth stocks came under pressure in an environment of rising interest rates as central banks sought to combat higher inflation. Growth stocks remained out of favor as persistent inflation meant lower interest rates were slower to come through. Also, healthcare stocks were used as a source of funds as investors chased mega-cap US technology stocks, and Chinese economic weakness affected the luxury goods sector. Osmani considers this period as a bump in the road for MNP's relative performance, and he has a high degree of confidence in the upside potential of the trust's investee companies. And now that investors are refocusing on company fundamentals rather than macroeconomic events, the manager is anticipating an improvement in MNP's relative performance.
Okay, so I see that MNP's first half 2025 report has just been released. What did we learn from it?
This is for the 6 months to the end of July 2024, during which the trust's performance, lacked that of the benchmark. Osmani reiterated his long-term investment approach, acknowledging that short-term results can be volatile. During H1 2025, the AI theme was again dominant in the market, but there was a wide dispersion of returns within the Magnificent Seven stocks, which are the 7 mega-cap US companies seen as major AI beneficiaries. Both the top performer, NVIDIA, whose share price increased by 89% during the period, and the worst performing Microsoft, share price up 5%, are in MNP's portfolio. Not surprisingly, NVIDIA was the trust's largest positive performance contributor in H1 25, as it once again beat consensus estimates and raised guidance. The two other largest positive contributors were Ferrari, which has pricing power in a market where demand exceeds supply, and Mettler Toledo, which has resolved its supply issues and has a well-received new product offering. Conversely, the biggest detractors to MNP's performance in the period were Estée Lauder due to excess inventories and pockets of weak demand, Sartorius Stedim, which reduced guidance but whose long-term outlook remains intact, and Illumina, which has been working through a difficult and unpopular corporate transaction.
Right, thank you. So, before we wrap up today, are there any other features of the trust you'd like to highlight?
Yes, I think it's important to emphasize that MNP is a straightforward listed equity fund with no derivatives. Income is not a major feature of this trust. Regular annual dividends of 4.20 pence per share are paid using the trust's extensive distributable reserves when required. And since 2013, the trust's board has employed a zero discount policy, aiming to ensure that, in normal market conditions, MNP's shares trade close to NAV. And this is a relevant consideration in an environment where investment company discounts are wider than their historical averages. The zero discount policy has been effective, ensuring that over the last decade, MNP's shares have traded at a very modest 0.6% discount to NAV.
Okay, Milos, that was a very interesting rundown on this high quality global equity portfolio. So, thanks very much for that. You've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about MNP and other investment companies that we cover, please visit www.edisongroup.com.